The S&P 500 finished higher today, yet most stocks on it actually fell. Welcome to Finance in Review and your U.S. market recap for Tuesday, July 14th. Nothing in this video is investment advice, just a clear look at what the market did. A narrow group of giants did the lifting, while the average stock slipped. And later, why the chipmaker behind NVIDIA's AI servers jumped 27% on its first days as a U.S. listing. The S&P 500 rose after a cooler-than-expected June inflation reading landed before the open, lifting big technology names. The index added 0.38% to close at 7,543. But look under the surface. The equal-weight S&P actually fell about 0.4%, meaning the typical stock lost ground even as the index rose. A handful of megacaps, led by NVIDIA, drove more than the index's entire point gain. The Dow Jones Industrial Average was the laggard among the majors, essentially flat. It edged up just 0.02% to close at 52,508. With cooler inflation pulling Treasury yields lower, the Dow's mix of financials and industrials saw only modest gains, while a historic drop in IBM, one of its own components, weighed heavily on the average. The Nasdaq Composite was the day's clear leader, climbing 0.9% to close at 26,107. The gains followed that softer inflation print, which sent Treasury yields lower and gave beaten-down semiconductor and memory chip names room to rebound. NVIDIA rose about 4%, and the broader chip group led technology higher. The Russell 2000 index of small caps added 0.39% to close at 2,965. That roughly matched the headline S&P, but it masked weak breadth underneath. Across our tracked universe, decliners actually outnumbered advancers, 56 to 49. So even with the small cap index green, participation was thin, a recurring theme in today's market. The VIX, Wall Street's gauge of expected stock market volatility, fell 3.85% to close at 16.5. It measures how much movement traders anticipate over the coming month. A reading in the mid-teens sits comfortably below the long-run average, pointing to a relatively calm mood, even with the sharp moves in individual stocks today. Sector performance told the same narrow story. Technology led by a wide margin, up 1.29%, as chipmakers rebounded following the morning's cooler inflation data. Energy gained 0.37% alongside a more than 2% rise in crude oil, and financials edged up 0.2%. But the rest of the board leaned red. Healthcare was the worst performer, down 1.93%, dragged lower by a slump in Biogen after a closely watched Alzheimer's study disappointed investors, along with broad weakness across biotech. Consumer staples fell 1.38%, and real estate slipped 0.49%. With 8 of 11 sectors lower or barely changed, technology essentially carried the entire market. It's a textbook example of a narrow advance, where the headline index rises on the strength of one or two groups while most of the market drifts lower. Now to the biggest individual movers, the story's other channels skip. The standout loser was IBM, the technology services and mainframe giant, which cratered more than 25%, its worst day on record. The company pre-announced weaker second-quarter results and said customers are shifting spending away from its software and mainframe products toward AI servers and memory chips. Ericsson, the telecom equipment maker, fell about 13% following its own quarterly report, and Denali Therapeutics, a biotech, dropped roughly 14% after announcing it would sell a regulatory priority review voucher for cash. On the winning side, the day belonged to SK Hynix, a memory chip maker whose U.S.-listed shares surged more than 27% to a record high. The company said it had begun mass production of its next-generation 12-layer HBM4 memory for NVIDIA's AI platform, and the launch of new leveraged trading funds tied to the stock added fuel. Notably, the same AI memory boom lifting SK Hynix is the very shift IBM blamed for its shortfall. One trend, two very different outcomes. Turning to the most actively traded names by share volume. New Holdings, the Latin American digital bank, was among the busiest, with roughly 146 million shares changing hands as it rose about 2%, following a new buy rating from a Wall Street analyst. American Airlines traded around 138 million shares and fell nearly 4% on no major company news of its own. NVIDIA was heavily traded as well, about 118 million shares, and its 4% gain made it the single biggest driver of the S&P's advance. Chip and memory names dominated the volume leaders, a sign of where the market's attention sat today. Time for today's Market Minute, and the topic could not fit the day better: market breadth. Breadth simply counts how many stocks rise versus fall, regardless of their size. It's a measure of participation, not weight. Because major indexes like the S&P 500 are weighted by company size, a few enormous firms can pull the whole index higher even while most of its members decline. That's exactly what happened today. The S&P closed up, yet the average stock and the equal weight version of the index both finished lower. A rising index with narrow breadths and a rising index with broad participation can look identical on the surface, but underneath, they tell very different stories about the market's health. To recap, the S&P 500 and Nasdaq closed higher, led by a rebound in technology and chip names, while the Dow finished nearly flat. Yet beneath the green, the average stock fell, healthcare lagged, and IBM suffered its worst day ever. The day's defining theme was narrow leadership, a handful of giants masking a softer market underneath. That's the market close for today. Thanks for watching. And remember, this is information, not investment advice.